Hey guys, it's Max Convexity. How's everyone doing today? Well, I want to go over the ULTY trades, our profit and loss, and our dividend. We'll see how we're doing on our dividend so far, 3 days into this week. All right, so direct your attention down here to the bottom line. We brought in $22.8 million worth of premium. Great job. That's from all those calls we sold. Unfortunately, we bought some puts too, but the puts are a hedge. Spent about 5.6 mil on puts for a net premium collected of 17.2 million. Now, we also had cash coming into the fund today. We sold about 100 million in MicroStrategy shares. That raised some cash for the fund, and we had some other net profits we made, also some cash into the fund. So that's good to see. Assets under management right around 3.2 million. Cash on hand of about 3.2 billion. I'm sorry, cash on hand of 100 million. Shares outstanding is 557,425. So today's premium collected was 52 basis points. That's really good to collect that much money, collecting 17 million. Even on a $3 billion fund, that's about 0.5%. Not too bad. If we could do that every day, it'd be 114%. For the week so far, we've collected about 70 basis points worth of premium, which comes out to about a payment of 51%, if that's annualized, if that keeps up at that rate. And on a per share basis, so far this week, we've earned 4.1 cents per share. Now let's look at some of the individual trades here. We can look at these a couple of ways. First of all, let's look over here, just the ULTY positions. All right, here we go. ULTY positions. So as you can see, no more MicroStrategies. MicroStrategies is done. It's not in here anymore. We added a few new ones. We bought some Workday today. I think Workday may have been in there yesterday also, but we bought some Workday. We bought some I think that's Unity Software is what that one's called. We'll look at these trades in a second. We bought IONQ as well. And we also, well, no, we didn't buy CoreWeave. I'm sorry. CoreWeave's already in there, but I want to talk to you about CoreWeave. CoreWeave's an interesting trade. CoreWeave is an interesting trade, and we'll talk about that in a second. I kind of like that trade. It didn't work out for us, but I like what they were trying to do in CoreWeave. All right. Now let's look at the individual trades. Now let's just start with that. Well, let's just start with the stock we bought. So we bought some Affirm, 650,000 shares, some CoreWeave, and some IONQ, and also some Unity Software, and also some Workday. Now, Workday has earnings coming up. That one's an earnings trade. Those are the ones we bought. We sold Palo Alto Networks, and we sold MicroStrategies. Did pretty well on those, or did pretty well on Palo Alto Networks. I know because we have a copy trade going in it, and it killed it. We did pretty well. And that's even after today's pullback. We can look at that stuff in a second. We'll save the option bro stuff for the end of it. All right, so these trades, I've already examined them. They're all callers, just like we would expect. However, this CoreWeave trade, we had to close this trade. See this 121 strike put? We had actually sold 121 strike put in CoreWeave yesterday, or the day before yesterday actually, and bought the 116 strike put. So that's a bull put spread, and we had a bull put spread plus stock. That's a lightning spread. Now, unfortunately, it didn't work out. CoreWeave's price was down. Let's take a look at CoreWeave's chart. You can't win them all, can you? But CoreWeave fell out of this higher balance up here and was down actually at 88 for a while and bounced a little bit by the end of the day. It's down to 93. But unfortunately, that put spread, we had to settle that for a loser. We had to buy our shorts back. We bought the 121 back. That cost us 17 million. Now, luckily, I mean, our hedge was also worth a lot. So we received 14 million for our hedge, but that still left a $3 million hole in our pocket. And we did not establish a new lightning spread. We just established the normal trade. We sold the 97s calls and bought the 85 puts. Just your standard trade. Okay, so I want to standard trade for ULTY. So let's look at the small fry version of that. We have these trades in here. So if you want to do that, play along at home. Play along at home. You don't need the stock and you don't need a put. You can use the call in lieu of the stock and a put. Remember, long stock plus a put is the same thing as a call. It's a synthetic equivalent. So we're going to use the 85 call for our stock and our put, basically, or exactly what it is. Then we could still sell the same option they sold, and they sold the 97 call. Very good, guys. Now let's look at some of the other trades in here. This is their ULTY trade. They did the 38.5, 34 caller. They did a caller. We're going to do a call spread. We'll see how that one turns out. Then also here's the Unity software trade. They did the 38.35 caller. We're going to do the call spread. Same difference. We'll see how that one works out. We could easily turn this into their trade. Let me show you how to do it. All we have to do is buy the stock. And then switch the call to a put. Same trade. We'll save their version too, just to prove it and see. We'll call this the big boy version. You can do whichever one you want. I will save that as a new trade. This one right here, doing it this way, ties up $3,700 because we have to own that much stock to do it. But that's how much it ties up. Our max loss, or our risk, is only $195. So it's the same amount of risk as the small fry. There's the big boy, and here's the small fry. $205 on the. It's within $10 of the same amount of risk. And also, I put their actual fills in here, and they probably got filled a little bit earlier in the day or something. But that's all you need to do to do this. You can do it either which way you want. You can buy the stock, switch the call to a put, and then you have a caller. It's the same difference. All right, so let's see what else we have here. We also looked at the affirm trade. Now this one, and these are all for this Friday. This one, they sold the 77 strike call and they bought the 70 put. We're going to buy the 70 call just because that's what we like to do. Nothing I like as much as a good old debit call spread. Debit call spread's a good looking trade there. So let's take a look at this. There's the small fry version of it. Tie up about $300. Have the same risk and reward as they do. Once again, if you want to see how to do this the other way, all you do is buy stock, get 100 shares of stock, switch the call to a put. Same deal. Same risk, same reward, same everything. Outside of, you don't get when you do it this way with stock, you get a credit. Okay, so the credit's cool. Risk and reward still the same. The credit's cool, but you're tying up $7,300 to get this $58 credit. That's still not bad for a week, but myself, I would rather do it the other way. Let's save this one. We'll save this big boy trade, and we'll track this and see how they come out on this, and we'll make sure that I'm correct about that. Now let's go back to the small fry. We'll look at the affirm small fry trade. It's the same. It's the same outside of the credit. You know, we're saving ourselves. We don't have to put up $7,300. All we have to put up is $333. But we forego the $58 credit. We still get that $58 on the end. The money didn't go anywhere, but we just don't get it up front. You get paid the $58 credit for being able to put the stock up. That's the benefit of doing it that way. So Jay and Scott, of course, they're going to want to do it. One thing, they have $3.2 billion. So they have plenty of money to buy stocks. So they're always going to do it the big boy way. But if you want to follow along at home, same risk and same reward. Now, speaking of that, let's see how some of their trades have been doing. We've been doing this for a couple of days. So we did this one right here, this work day. Now that's today's trade. Let's see. Right here. This is yesterday's trade. Look at this Palo Alto network. It was up $615. They took it off, but that's a good trade right there. And I did it both ways. I did it the big way and the small way, and they both made, within a few dollars the same amount of money. We also looked at a trade in Target, and I went ahead and put in their price and their actual share count, how many contracts they did, and they're up about $15,000 in this one right now. All right, so let's check out the market, see what's going on in the market. We have S&P futures and down 21 basis points. But it just looks like this. It just looks like this trading range back here between 64.20 and 63.80. It's a 50-point wide trading range we were in a few weeks back. It looks like it's calling our name right now. We'll see. We'll see. Let's look at the Qs. The Qs are down 40 bips after a pretty bad day. They're on the low for the day, the low for the 24-hour period. Wow, that's not good. The one encouraging thing is Bitcoin's up. Let's look at Bitcoin futures. Bitcoin futures trade on the CME, but yeah, that doesn't look encouraging either. They're on the 24-hour low or close to it as well. So we'll see what happens. We'll be back in the morning with more. We'll be back in the morning at 8:30 with the morning update. Then we'll have an evening update. We also have Mike Coe on the station. He's usually on CNBC, but he made time to be on our little channel, and I really appreciate that. He's going to be on Thursday at 1 o'clock my time. So I'm excited about that. All right, guys. Well, thank you very much. I hope you like this new feature, and I will talk to you later.